Good afternoon and thank you for your time today. My name is Leon Hunt. My colleagues are Marcel and Andre. We will be presenting our business analysis and data science proposal for Coventry Building Society. Here is an overview of the topics we'll be presenting today. Coventry Building Society were established in 1884 by a local bookkeeper by the name of Thomas de Fern. At that time, the local economy was driven by agriculture. The source of funding available to the local farmers was seasonal and unstable. Thomas saw this opportunity and established CBS to provide a year-round stable funding source. They are the second largest building society in the UK behind Nationwide. They have 3,736 employees, of which 340 work within IT. They currently hold £35.4 billion in savings and £43.2 billion in mortgages. Their net promoter score, which is an indication of their customer satisfaction, is 77% compared to an industry average of 44%. Their fiscal year ending 2020 gave them a pre-tax profit of 124 million. This is a 16.33% decrease compared to the fiscal year ending 2019 due to the impacts caused by the COVID pandemic. Their Tier 1 capital equity is 39%, exceeding the mandatory 9%. 0.47 cost basis in comparison to the industry average of 2.8%. So, on this slide, we have a bar graph that's outlining the top 5 building societies by asset and profit. Today, we'll be focusing particularly on Nationwide and CBS. We've included the other 3 societies for context. Nationwide has 124 million in assets and a pre-tax profit of 469 million, compared to Coventry, which has 51.4 million in assets and a pre-tax profit of 124 million. As we move on to the next slide, we'll be providing the reasoning why Nationwide has such a large gain over CBS. There are a number of financial products available to building societies in the form of current accounts, savings, ISAs, mortgages, loans, investments, insurance, and credit cards. As you can see, Nationwide's portfolio includes the full range of products available. And this is a really good, strong indication of why they have such a high profit of 464 million plus. Now, CBS only offers savings, ISAs, and mortgages. Their business model focuses on providing high quality, good savings products to attract the top cash savers. They then take this money and they lend it out to the mortgage space. Their top 2 markets within this mortgage space are equity release for the over 60s and buy-to-let mortgages. I would like to hand over to my colleague Andre to continue the presentation.
Thank you very much, Leon. Well, as we got the job from the executive members, we should have a look into the mortgage sector and into the mortgage business, how it will evolve and what we need to do to be compatible against our competitors. Well, first of all, we analyzed the company and came up with the main 2 problems. The first problem is the unknown risk on the market and our customers. We are not fully aware of what risks they bring. And also the lack of automatization is a very key problem. We have identified several key challenges. For instance, the adjustability on a timely manner. We should be able to adjust on a interest rates challenge and so on faster than our competitors. Then the transparent decision-making process. Every decision should be transparent for every customer, so they shouldn't think like we just give them some random interest rates. And also the application of data analytics is very crucial to be sustainable in the business. On the other hand, we have digitalization through the process, which is not good enough at the moment. We need to have digitalization through all the processes to ensure we are always accurate and also have the speed which is needed. Currently, we have a lot of data which is not used very well and also just stored on a server. We need to optimize our data handling according to the 3Vs, volume, variety, and velocity, and also need to ensure that we are able to use it in the future as well. The dependence on key individuals should decline, as at the moment some people have all the knowledge and all the decision making. This should be distributed over time through data supported decision making. Our solution sees for that we get the data and use to gain information, but also create business knowledge out of this information and hopefully come to a wisdom by integrating this knowledge. For that, we need to take advantage of the automatization, upgrade our infrastructure, ensure all the regulation and compliance to the whole business, and also gather more and from the appropriate data. We use then this data to analyze and get information. Besides the descriptive and predictive analytics, we also should use this data to do prescriptive analytics and find and solve certain business problems. Our main benefit is adjusting the interest rates immediately. And therefore, I want to show you a short example of a current problem. Well, we have the Bank of England, which is likely to increase the interest rate due to Brexit and also to the pre-pandemic situation. The housing market increased in value, though some areas haven't seen a positive change of values. Especially certain cities have decreased value in their housing markets, as most of the people wanted to go to the countryside. This may result to more debt defaults over the industry, and especially in certain areas, as properties are not able to run their properties on a high capacity, and also the higher interest rates may lead to a heavier burden of their payments and lead to a bigger problem also for our mortgage business. On the other hand, we have also some customer which had luck with their properties and increased in their value, and these are lower risk for us, and we also can look at this more deeply. The main benefit again is that we are able to adjust the interest rates immediately to the environmental risk, but also prognose the upcoming risk and build counter strategies in advance. Of course, we have several other benefits, such as gain business intelligence in various questions, but also monitor all the different relevant aspects. For instance, the housing market, the last sales in the region, the job data, our business efficiency. This list is nearly infinite. Furthermore, we can personalize our customer products and go directly to the customers and what they need. And also we are able to anticipate what the customer needs in the future. Especially our customers today, we have to analyze which are the customers in 10 years to be ready and have the appropriate services. Furthermore, we are able to build customer loyalty, hopefully also through the next generation. So speaking of the children, which are our next customers, as the most people are buying only one house, respectively one mortgage in their lifetime. How are we going to do this? Well, therefore, we have a few focus points which we need to check for our data collection and mining. First of all, we have to collect enough data and especially the appropriate data. We need to consider the privacy and the GDPR and all the law circumstances, of course, but also need to ensure the data and their integrity. Furthermore, we have to look at the costs of managing this data, of our employees, but also of the infrastructure. We need to have a deep look into the efficiency and the future scalability. Last but not least, the parallelism and the distributed system. We need to ensure the data is in a redundancy available, not only for backup, but also to improve the speed, to comply to certain laws in a country or in a region, and also for geolocation purposes. Let me give you an example how we can use this data on a real life example. Well, first of all, we need to analyze the situation. Therefore, we take all the measurements from governments, but also which are available on the market. We have a look into the bond market and into the inflation rate. We analyze the competitors, the debt defaults, the employment figures, but also the aerial housing market. With all this data, we are able to monitor the situation, and in case any variables are changing, we are aware of it immediately and can adjust to it. Furthermore, we want to predict a trend. We want to know how is the inflation rate changing, and how is the bond market evolving, or how is the Bank of England going to change most likely their monetary policy. Also, locations and the aerial housing market should be predictable to know where we want to go and where we want to focus our business. Therefore, we need also prescriptive analytics to mitigate the risks. We want not only to analyze the risk of a certain house in a certain area, but also be able to analyze the risk of the buyer, of our client, with a certain job, with a certain buy behavior, and a certain income, and so on. And with this risk analyzed, we can look into our portfolio, into our assets, and mitigate the risk for the bank to take or to give these mortgages and loans, and also have a look how we should distribute our assets. What our main goal is to analyze the risk, to mitigate the events, that it doesn't happen like in 2008 during the financial crisis, where all the risk analysis went bottom up, or recently with the fund like Greensfield and Archegos, where all the banks lost their money. Of course, there's a lot of things we can do with data, and the future looks bright. Therefore, Marcel is going to give us further instruction.
Thank you very much, Andre. So as stipulated, the benefits can be perceived for technological integration to any business, which will be discussed. So moving on to that, when you look at the next slide, you will have a desired state, which will come up. Now, these can be broken to and displayed into different categories. In other words, by utilizing the predictive analytics models, many businesses have successfully implemented parts of the technology, with examples such as the Alibaba online platform utilized by WeChat for transactional data, facilitating the purchases for end users. Moving on from there, the banking industry needs to reinvent the interactions that it has with the customers in a similar fashion as the rocket design, as described by Elon Musk, by reinventing the rocket and thereby reducing cost, which in the long run has saved NASA about 95%. The focal point in any organization is to streamline processes, alleviating risk, as Andres quite rightly put in the previous slide, and incorporating resilience whilst attaining customer satisfaction and revenue generation. Addressing these constraints as per the diagram, adaptability with current process, training requirements, legacy IT systems that are currently deployed, CRM systems utilized, and product integration, the power of predictive analytics will definitely come into play. For example, if you break the current models of predictive analytics into the categories, The first one comes down to segmentation, utilization of algorithms that select target groups based on variables selected, such as demographic, firmographic, and the AI can categorize these leads into market segments. Prediction, as market segments are cluster development, these can be enhanced via accurate behavioral models on historical data. Recommendations after forensic leads have been established, ascertain what is perceived as favorable outcomes, implementing foreseeable future trends for cross-selling and next selling, which inherently are reliant on predictive trade recommendation models. Moving on from that, as displayed within the ITIL guidelines to achieve value for the customers, 7 guiding principles needs addressing, which can be integrated within artificial intelligence capabilities, namely planning, which is a shared understanding of the vision, engaging, understanding of stakeholder requirements, design and transition, products and services which meet the stakeholder expectations, obtain the build, service component availability, deliver and support service delivery as agreed by the specification criteria, and improvements, which ensures continual improvement is encapsulated in the entire service platform across all services of spectrum management. Then moving on from there, the steps required to achieve these data-driven timelines include identifying the data, disseminating the data, i.e. separating data from the value that it generates, analyzing the data, interpretation of that before the visualization is presented to the end user audience, and enhancing the decision making by explaining the results in a visual format, as if in a story format for formalization and clarification, driving the justification of it. Moving on from there, to achieve the decision-making criteria for artificial intelligence, the steps displayed needs addressing by questions. First of all, you define your questions. In your organizational business, data analysis must begin with the right questions, should be measurable, and they should be clear and concise. Step 2, clear measurement priorities, which needs to be broken down into decide what to measure and how to measure it. Decide what to measure, which explains answering the question that inherently comes as part of the first part. Step 3, collecting the data. With your question clearly defined and measurement priority set, now you collect the data. And remember to keep in point that with the new data, there might be existing data that becomes prevalent in the database, which might need to be analyzed as well. Which brings me to step 4. Analytical steps needs to be implemented into this data step, which inherently inherits deeper dive data analysis. And that will be more likely that you might need to review the original question again, thereby enhancing your data sets. Step 5, which is interpreting the results, which as finally as you conduct the research brings up into the following key questions. Does it answer the original question? Does the data help defend against objections? And are there limitations to these? By following these 5 steps in your data analysis process, you make better decisions for your business or government or your agency because your choices are backed by data that has been robustly collected and analyzed. Moving on from there, in the future, blockchain technologies are currently in use for consensus. So these are shared ledger updating after transactional data validation, replication, block approval automatically creating the records for the participants in the channel, immutability, where blocks can be added but they cannot be removed, and security, so only authorized entities can access or create these blocks, which is an exploratory technology that is currently being utilized in banking industry, but it will be presented more relevant in the future. AI chatbot integration to become a standard for banking and other industries due to immediate response criteria and enhanced customer satisfaction. Personalized AI services integration via web application or installed applications of Internet of Things device responders, such as Alexa or Google Nest. You will have daily or monthly reporting personalized according to your financial data and interests, allowing query data sets, so enhancing expenditure or highlighting investing opportunities. Automated reporting elements will be available for customers to pull online websites. You will have AI generated predicting for decision making for the customer. It will encapsulate ITIL processes as mentioned previously, and the data will be in essence scalable within the organization, thereby implementing you can accumulate more data based on your queries that was the pre-subsets, thereby enhancing data decision making as well. State-of-the-art open source implementation will be dependent on budgets, but as an example, you can see that Amelia was employed by Everest, which is a company, thereby reducing human resources and the response time significantly across the board. The training requirements for this would obviously be substantial as well, as you would need to train the AI and maintain the services. And this would be effective in the long run. The only difference is that with employees and human resources, you can't work them 24 hours a day, 7 days a week, on top of annual leave, sick days, or traffic problems, which AI then presents as a solution. I'd like to thank everybody for your time. And if you have any questions, please feel free to contact Andre, Leon, or myself for any information. Thank you very much.